If you're trying to get a mortgage in Dubai today, especially as a self-employed investor or self-paying salaried person, you've probably already noticed one thing. The rules have changed. Approvals are more structured, but mortgages are still very achievable if you know how the system works. I've had multiple mortgages in Dubai, in my home country of Moldova, and also I've analyzed different type of mortgages everywhere on this planet. But to be more specific, I've actually recently gone through this process of getting the pre-approval myself once again. But this time, I went in as a self-employed person. So reviewed real bank offers, and I've spoken directly with multiple lenders just to gather the best data and compare it for you. So in this video, I'll actually break down what's happening right now, not the outdated theory. Besides the self-employed case, I'll also look at all the other cases, whether you're salaried in the UAE, whether you're a non-resident and you want to get a mortgage in the UAE, and ultimately compare the mortgage scenario versus the off-plan and what is better for you. So if you like this kind of videos, if you find this useful, then please hit the thumbs up button. It really helps a lot, more than you think. And if you're generous, subscribe to see more of these videos on the channel. With that being said, let's dive in. What's really changed in Dubai mortgages or UAE in general? Dubai hasn't become anti-investor. It's just become more precise. Banks are now stricter on documentation, they ask for more requirements, and they are clearer on income calculation, but still very competitive on pricing, especially to win quality borrowers. The big shift is how income is assessed, not that the mortgages became unavailable, because they definitely are, and not only for residents, as I previously mentioned, but also for the non-residents. What is the best situation if you want to get a mortgage right now? Salaried residents have the best conditions. If you're a salaried UAE resident already, honestly, this is one of the best mortgage environments that I've seen in years. The typical requirements start with the 6 months employment in the UAE. Most probably, they will ask you for a salary transfer to the bank that you're going to request a mortgage from, or in the case that you're transferring the salary to a different bank, then switching to the bank will most probably give you some better rates. They will definitely ask you for some standard payslips, usually for at least 3 to 6 months, an employment contract, and a salary certificate. The LTV that they're going to offer is one of the best in the market. For expats, you are going to get up to 80% LTV for properties under 5 million dirhams. So you get the 20% down payment plus the according fees. If you are Emirati or from the GCC countries, then you will most probably get the 15% down payment, which is even better. The reason why I said this is the best scenarios that I've seen in the recent years, especially for salaried in the UAE, it's mostly because of the rates right now. Most cases you will find fixed rates of 2 to 3 years at around 3.99%, and that includes the bank rate and the IBOR rate, which is basically calculated from the National Bank. The rates will become variable afterwards, but you can always switch from bank to bank. You can just refinance it with a different bank and get and lock in another fixed term rate, which is highly recommended. This is why leveraged and cash flow positive properties are really making sense right now, because the rate is pretty low. You can lock it in for a few years so you know exactly how much you have to pay every single month to the bank, and you also know exactly what is it rented for, especially if you are getting this mortgage to rent it out and to basically have the tenant covering your mortgage payments, and maybe in the good case scenario, actually not even in the best, make some profit on top of that. So let's say you're not super savvy into maximizing the profit, you just want to get this mortgage, rent it out, and have someone to pay it, then the ultimate scenario is that you down paid as an expat 20% and had someone else cover the remaining for the next years that you got the mortgage for. And in the case of a Emirati, then you paid 15% down payment and then you rented it out and the tenant would cover basically your property. So you end up with having a property more or less paid off by someone else. The next scenario, which is definitely harder and probably is the hardest way, is for the self-employed residence in the UAE. This is where most people get confused. And honestly, I got confused myself many times as well. Self employed mortgages are not blocked, they are possible. Let's make that clear. They are just structured differently now, and many banks and many mortgage advisors will tell you multiple different things because there is not really a common practice right now. However, after analyzing many of these offers and proposals myself, this is what I found out to be the same in all the proposals that I got. So, first, the requirements. What are banks looking for? The banks will either consider your company turnover, and in that case, you will have to actually present the company financials, all the documents. The company has to be operating for over 2 years and have some actual revenue that they can consider and look into, stable income pattern, and audited financials as well. On the second option, they will actually look at you as a salaried self-employed person. So in that case, you will have to present the same scenario as you have for the employed residents in the UAE. So you will have to present the 6 months payslip. Basically, you need to transfer your own salary. However, for these two scenarios, there are different LTVs implied. In the case that you are presenting to the bank your company and you want to get a mortgage based on how much your company is making and not your salary being transferred to yourself, then usually they will give you up to 60% of the income turnover for the last 12 months, not the expected earnings or anything else. So that makes it a bit difficult because if you want to, for example, get a property valued at 1 million dirhams and you want 60% of that, then basically your 60% of the previous 12 months have to be at least 600,000 dirhams. Meaning that basically for the past 12 months, you made probably over 1 million dirhams. But yeah, let's not confuse this. This is number one, which is the hardest way. So assessing your income as part of your actual company, it's really, really way more difficult. And they will also get into really details on how the company operates, how many employees you have, what you're actually doing, what you're selling. So it makes it a very, very difficult route. That's why number two, which I just briefly mentioned previously, but we'll go into details right now, makes more sense. And that is when you present your own paid salary. In this case, the reality that I saw from many of the proposals that I received, and I'll actually pop up some of them on the screen so you can see what I'm actually getting. And that was for a case of a 1.2 million dirhams property. We'll go into details soon on that as well. But the best that I got is 35% down payment and 65% loan. This was the sweet spot or the best rates that I actually got from multiple mortgage advisors, multiple banks at the same time. So I tried to double check with the advisors, also with the banks, and cross check if there is any difference in there. There's not much, to be honest. You can go straight to the bank, you can go through a mortgage advisor, maybe they have better contacts and will get it quicker for you. But generally, it's more or less the same, 35 to 65 as self-employed, self-paying yourself salary in the UAE. So to wrap it up and make it clearer for you, you need to transfer your own salary for the last 6 months from your corporate account to your personal account. You will present that. They will also ask you for the company documents, but they won't go into so many details as in when they would actually assess the loan probability. In the first case, just purely based on the company, they will primarily want to see that you are paying yourself regularly and that you have everything in place. Very similar to the non-resident mortgage type, which we will cover soon after this, but very, very similar. So the rates that I got here are typically in between 4.49% to 5.25%. So they're definitely higher just because you are regarded as a self-employed person and basically they don't think that you will have a stable salary paid by yourself and you won't probably have a very, very stable income, which I think I find it a bit funny in this market, especially that if you are employed in the UAE, you can always lose your job and then you also don't have stable income. And I think if you would compare the self employed people with employed people, it's kind of easier to make money as self-employed. When you're already making money, you have some revenue streams, you have some context clients, and you can really get back up quicker than when you are employed, because that's when you have to actually search for a job, stay unemployed, and maybe you won't have actually income to support paying for your mortgage. So that is a little bit strange, but that is the case. So, yes, overall, harder than salaried employed people in the UAE, but still possible. So, I mentioned that I will also share you the actual case on what I personally got. So, for a property that I was looking at a 1.2 million valuation, the loan amount would be 65%, which is 780,000 dirhams, and the long term I got the maximum. Usually that's the best, and I would always recommend that because you will have lower monthly payments and you can close it anytime anyway. So in this case, you have a long term of 25 years or 300 months, and we can see here that the best rate that I actually got was from CBD Commercial Bank of Dubai, and that is actually the same for non-residents. They would also mainly get the best rates from CBD, and here the monthly payment would be 4.331, so 4,300 dirhams, and the rate would be 4.49%, which is fixed for 5 years, and that is way better than the other ones where, for example, in Mashreq, we have 5.25% fixed for 2 years. We can also see in details what is this rate comprised of. You have the 1.99%, which is the margin from the bank, plus the 3 months EBOR, and basically the same for Mashreq, where is just a little bit higher. So that is why the difference in the rate happens. In this case, we can see that the 3 months EBOR is the same for both, but the bank a higher margin in case of Mashreq Bank. If we look at the total transaction costs, interestingly, the number is higher for CBD just because they have just a few higher rates in terms of the property valuation fee. And actually, that's it. That's the only difference that we got here. But the thing is, it's, in my opinion, way better to pay that and just know that you will have a lower monthly rate that would be covered by the same rent. So if we go back to compare the monthly rate, so 4,300 or 4,600, and let's say your rented apartment will bring you 8,000 dirhams per month, then in the case of CBD, obviously you will have to cover your monthly payment, which is 4,331, and you will still be left with higher profit than in case of Mashreq. So 8,000 minus 4,300 or 8,000 minus 400, 600, to put it in very simple terms. So in that case, I would choose that. But this is a very real scenario, very real case that I got it super, super recently. So hopefully this helps you. And if it does help you and if you actually are going through this process yourself, drop some comments in the comment section below because I really want to hear your story. Next in line, we have the mortgage for non-residents, and this is where the misinformation usually happens, not only on the self-employed, but also here, because there are so many people that are non-residents in Dubai. They might have bought something in off-plan, in construction, and now they want to mortgage the remaining part. This is when misinformation hits the fence. To make it clear, non-resident mortgages in Dubai are actually quite accessible, and they are probably easier than self-employed. What's available right now? So CBD, as previously mentioned, offers 35% down payment and 65% loan. So the same case as being self-employed and paying your own salary in the UAE, the same applies for non-residents. Some other banks typically require 40 to 50% down payment, so you can analyze them, you can reach out to different advisors and see which one is the best for your case. Or you can always reach out to me, book a one-on-one call, and we will go into all these details and try to analyze the best scenario for you. If we look at the rates, usually the rates are either similar to the self-employed rates or slightly higher, but they're still very competitive compared to global markets. If we look at countries such as Iceland, they apparently have really, really high rates of like 10 to 12%. If we look to Russia, they have over 20%. That's crazy. So, yeah, obviously, these are not the first countries that would come to your mind to compare, but definitely they are comparable to many of the major countries. And even if you compare to the West, in the West nowadays, it's still in around 3 to 5%. What are the key points? The banks will look for clear income documentation, so you need to have those 6 months payslips. This will really make it easy for them to assess it and to give the pre-approval almost right away. They obviously want to see a strong property choice because they would care about the property that they are giving the loan towards, because if something happens, they need to have a backup plan. So definitely they will assess that as well, but this is accessible in all the cases anyway. So no, if you ask about non-residents being able to get a mortgage, they're not blocked. It's really possible, and it's, as you can see, pretty easy actually. They just need clean structuring and the right bank. That's about it. Some of the mortgage costs that you must factor in, and we've seen on the screen that I popped up with the actual proposals that I got for the mortgages, but let's run them through quickly here. First one is the bank processing fee, which is around 1%, but it could be lower in some cases. It could be, in the best case that I've seen, 0.5%, which is half of 1%. So if you find that deal, that's really, really good. It will save you some money. Valuation fees, which are usually for this kind of apartments, let's say in within 1.2 to 1.5 million, it's about 3 to 4,000 dirhams. Mortgage registration, which is 0.25% of the loan amount. Mandatory life insurance and mandatory property insurance, which usually it's a very, very small percentage of the loan amount, and that would be within around 1,000 or 2,000 dirhams per year. These are real costs and must be included in your ROI calculations. Now let's compare the ready and the off plan and see a actual reality check. This is important because most off-plan properties don't work well with mortgages, carry valuation risk at handover, and delay the cash flow. While the ready properties generate the cash flow immediately, support the leverage better, you also know what you're buying, so you don't have to wait or expect something and then receive something less under your expectations. So in this market, I've heard of some off plans or companies that partner with banks offering mortgages at a later stage after you paid a down payment in that off plan, but this is not really the typical case. So usually the property has to be completed or has to be at least finished at 85 to 90%. That's when you can approach a bank and get an actual mortgage on it. So if you're using mortgage or you want to use a mortgage as a tool, then you have to look only for ready properties. Quick note before we wrap up, mortgage structuring today, especially for self-employed or non-residents, is no longer straightforward. That's why I've been through many proposals, not only in this country, but in other countries, and that's why I made my one-to-one advisory offers. We check real eligibility before you commit. We structure your income properly and unbiasedly because I have no affiliation to any developer, so we will actually look into the right properties that you are looking in, or we will find something that will suit your budget and your ambitions, and make sure leverage improves return, not kills it, and doesn't put you in a situation where you actually are really stretched. If you want clarity before moving forward, then link is in the description below, so book a one-on-one call with me right now. As you can see, Dubai mortgages haven't disappeared. They've just matured. If you understand the rules, the rates are now very attractive, and this could be a very life-changing situation. Ignore the details, you'll struggle unnecessarily. If this helped, hit that like, subscribe, and I'll see you in the next one.